Welcome to the Real Money Show, the number 18778 Silver and the website guildhallwealth.com. Thanks for joining us on this Thanksgiving long weekend. Joining me is Jerry Correia. How are you?
Very good, Jeremy. Happy Thanksgiving, everyone.
Excellent, excellent. My name is Jeremy Wiseman, and we've got a lot to cover today. So we're going to cover the Fed. We're going to cover debts. We're going to cover where we are in the gold and silver market. How are those short positions looking? We're going to maybe even look at the energy sector, and we're going to look at who is buying gold right now. And we'll talk about balance sheet and central banks. All of this is going to come together to help you understand why we believe owning physical precious metals is so important, especially during these inflationary times. And if you'd like to acquire some physical precious metals, you can go to guildhallpreciousmetals.com. Great place to start. Great place to pick up a few, gold bars, few gold coins, 10-ounce bars of silver. We've got tubes of silver maples. Again, great place to start. Start your physical stacking, if you will. That's at guildhallpreciousmetals.com. If you're looking to hold physical precious metal in a registered account, that's also something that we deal with at Guildhall Wealth, where it's fully segregated, fully allocated to you. You own the product directly. You have direct ownership of your own physical precious metals in those accounts. We like to use the motto, if you can't hold it, you don't own it. And before we get into all of the things we have to discuss today, Jerry, what's happening on the e-store?
Well, last month we had a winner, so congratulations to the winner of the contest. We drew the number and we got in contact with the person that won. So again, congratulations on the winner of 5 ounces of silver. We're going to be doing the same contest again this month, Jeremy, for the month of October. So we're going to be doing a draw October 31st, Halloween weekend. Another draw for 5 ounces. So that's what's going on. Place your orders on the Guildhall Precious Metal site, guildhallpreciousmetals.com. We have the product in stock. Give us a call if you're looking for something specific. We can likely source that as well, but we're slowly getting inventory again. So that's what's up.
And before we jump into all of this information we have to dig through, what was the feeling of this week for you? It was a very hectic week. There was a lot happening in the market. What was the sense? What was coming across Jerry Correia's desk?
Same thing, Jeremy. Really, no one's really watching the price. Congratulations for anyone who took advantage of the price this week and got their hands on some physical bullion. Congratulations, because it's getting harder and harder to get. So seeing much more activity with people looking to really pad bullion in every area of their investment portfolios. Before it was just one, maybe a TFSA, but now they're bringing on board the RSP. They're doing a little bit of private, so they open up a private depository account with us. Some individuals have, jump ship. Some are leaving the country, unfortunately. Sad to see some people go, but they're remaining. Their metals are staying with us, and just so, our clients know, you're more than just a number. You have our contact information. You have some cell numbers. We can text, and we would love to, build that rapport just by laying that foundation of trust. So even though you may be leaving the country or you're across the waters, you could still get in touch with us and have a chat about your inventories. Yeah,
I'm glad you brought that up. I would say that was one of the biggest trends this week. Is every day there was someone who was saying, I'm leaving the country. I'm going to Central America. I'm going to Mexico. Getting out and maybe go travel somewhere else where we don't have these type of constrictions, and I need to put my product somewhere. So we saw a lot of uptick in physical storage accounts this week as people are saying, look, I can't take this with me. I've got to keep it somewhere, and I like what you guys are doing. And of course, these are all clients who've already purchased product with us, and so they're saying, "Hey, let me bring it." Now, if you've purchased elsewhere, you can also store with us. So that's right. That's not a problem too. No. I had an interesting conversation with someone this week. I wanted to get your thoughts on it, Jerry. The client asked, "If the stock market goes down, will gold go up?" I thought that was kind of interesting.
I had the same conversation today.
Really? Yeah. So what did you say?
Well, we look at what happened in 2008. Right?
Okay.
We remember the 2008 crisis. It was a lot of things that happened. It was a chain of, you call systemic event where one thing led to another, which led to another. And the question was, what happened to gold and silver? Well, initially, because of the over-leveraged gold futures market, There's a lot of selling that has to happen, and a lot of people, institutions going into the US dollar as this quote unquote safe haven. And for those who don't know, gold and silver are negatively correlated to that. So we tend to drop on the electronic market. So gold and silver start moving down initially. Gets dragged down with the rest of the commodity space, and the commodities being all of the industrial metals, whether it be, lithium or copper or one of the many, nickel. But there comes a point when this cascading of negative events happens and gold and silver take off their industrial metal hat.
Yep.
And they put on their precious metals hat, more of a currency, the safe haven. And that's when you start seeing silver decouple from the rest and start to really perform and start to break out, which is why we led out of 2009, 2010, and hit all-time highs in 2011.
And I would add to that, being there at the time, there was definitely this sense of throwing the baby out with the bathwater. People didn't understand gold and silver as much back in 2008. To them, it was still a speculative type of thing, especially on silver. It was more speculative than wealth preservation, which it's proven itself to be. I think as well at that time, both precious metals had performed quite well, so it was a place to take profit. And then, of course, again, there was a lot of leverage in the market as opposed to today in the precious metals market. There is less today than there was then. So that was kind of interesting. So, those are kind of interesting dynamics to reflect on. I approached it slightly differently because I feel like we always have this tendency to think in a binary way. Like if this happens, this should happen, right? Like it's grade 9 science or something. And it just doesn't work that way. The fact is that there's a lot of incorrect signals being sent out by the market. There's a lot of manipulation in the market. When the Fed is backing everything that you're doing and printing money, or, as we've reported on in the past, that all of these companies are buying back their own stock, there's a lot of mixed signals being put out into the market that are not accurate.
Right.
So, yeah, you could have a situation where there's a melt up in stocks because everything is hyperinflationary, and gold and silver are going up too.
Yeah.
Which one's outperforming is the question, right? Why are the stocks rising? Well, because the value of the dollar is disappearing. And that's why gold and silver have been rising for 20 plus years. So we have to understand that there's a lot of inaccurate signals being sent to the market, that it's not going to be exactly, if this happens, then this happens. But I think we have to, and which is why we have to go beyond what happens if the stock market goes down? What happens if the dollar goes down? It's more about understanding the fundamentals, the macro picture of why we're holding physical gold and silver, which is these are hard assets that are outside the financial system, or banking system, I should say, that there's a limited amount. And when you own it, no counterparty risk. We're about to get into the idea of debts.
Yeah.
And listen, at some point, the debts are going to matter because someone is going to say, I need to get paid. No, you don't get to default on me. I need to get paid, which means someone else down the line is going to be screwed.
Yeah.
Right.
Yeah.
And that is going to create a daisy chain. That is going to create the contagion, quote unquote, that people are concerned about. That is going to make gold and silver shine very brightly. And the fact is you can't just jump on at any time in this market. And that's something we've learned.
Yeah. And we are seeing who's buying this market in gold and silver. We're going to get into that a little later, but it's very important to disconnect ourselves from that binary. If this happens, then that's going to happen, because going back to 2008, we've never seen this before. The world has never seen quantitative easing before. And that was the solution then. We're on to QE4. And, they're talking about potentially announcing taper, which is not tightening, by the way. This is just slowing down the pace. But we already know the pace at which money supply is growing is already hyperinflationary.
Yeah.
So what is the solution? And this is why we get into what is big money doing? What are the central banks doing? And why are they doing it, Jeremy? So
you'll have to wait a little bit. We'll talk about that in a few minutes.
Stay tuned.
But speaking of the taper, Peter Schiff was talking about that. I totally agree with what he's saying. This idea, what he's talking about is, they could initiate taper, but they're never going to follow through with the whole thing. It's all just hot air, right? Okay, we have to look like we're doing the right thing, but we actually can't do the right thing. So he strongly believes that they might even initiate it, but then they'll pull off on it, just like Jerome Powell did the last time round, which I think was 2019, if I'm not mistaken.
That's right.
So I don't believe in the taper. I don't know if they can actually do it, but we are starting to see elsewhere around the globe interest rates are rising. And that's something that may be completely unavoidable. And you have to wonder what would happen if interest rates started to rise, because we know no one could handle interest rates in the double digits the way Volcker did it. No one could handle interest rates rising to 5%. So the back is against the wall and there's not a lot of options there. So how do you protect against the potential fallout of this? Because again, if you can't handle higher rates, then what is the option? Print to oblivion? You got to consider having some physical metal in your portfolio. The number 18778 silver, the website guildhallwealth.com. You can go to guildhallpreciousmetals.com and acquire some physical precious metal, gold, silver, and for every order that goes through, you can be put into a draw to win 5 ounces of silver. And we'll be drawing at the end of the month. It'll be kind of a trick or treat, more like a treat at the end of the month. And so you can go to guildhallpreciousmetals.com. Let's talk about the Fed balance sheet. Let's talk about Janet Yellen's opinion of the debt ceiling. And of course, this platinum coin, this $1 trillion platinum coin. We'll be right back. Welcome back to The Real Money Show. The number 18778 silver and the website guildhallwealth.com. Remember, if you can't hold it, you don't own it. Everything we do at Guildhall is physical. Gold, silver. We also do platinum. Speaking of platinum, not in registered accounts, but you can buy physical platinum with us. But speaking of platinum, Jerry, the craziest story I think that came out this week was the concept of the Treasury minting, very specially minting, a $1 trillion coin. What was your reaction when you saw that headline?
I had to scramble and look into it a little bit further. Obviously, it was just something out of thin air that was devised. It was something out of kind of desperation to come up with some sort of solution. But it's illegal, apparently, according to the Constitution and the Acts, because the proof coin is what they called it, cannot be put into circulation. So it's defeating in itself. It cannot happen. And in order for it to actually happen, they need to have $1 trillion worth of platinum, and which is just impossible. So, again, it was called a gimmick, I believe, what it was called, right?
It's the stuff of banana republics. At the end of the day, the idea of what happens if we don't raise the debt ceiling? Last week. Speaking of the debt ceiling, because this is where it all came from. It came from the debt ceiling.
Right.
Last week we talked about the fact that Janet Yellen was testifying before the House Financial Services Committee, and she was in support of eliminating the limit through legislation. So she was saying, let's just get rid of the debt limit. It's tying our hands. It's making our job complicated. And every, once a year, twice a year, they freak out about this debt limit, but they've never not raised it. They've always raised the debt ceiling.
Just blast right through it. Right?
They always blast right through it. But yeah, she said, let's get rid of it. It's complicated. It's difficult. It's tying our hands. And, at the end of the day, they always threaten, we're unable to pay our bills if we don't pass this debt limit. Well, if you can't pay your bills and you need more money to pay the bills, it's a Ponzi scheme. That's what it is.
Yeah.
You're admitting that you've got a Ponzi scheme. You're admitting that you can't handle not getting more debt. And if that's the case, why are you in public service if you can't balance the books? Right? So they don't have the discipline, right? These politicians don't have the discipline. The people running the finances of the United States don't have the discipline. Even in Canada, they're saying, "Oh, we did an amazing thing. We shut down the economy." Yeah, and then you just printed a ton of money while a whole bunch of businesses went out of business.
Yeah.
Right? It made no sense.
No.
The government doesn't make anything. They don't produce anything. They don't give any value to produce anything. They just take. They just take taxes. And if you can't handle the taxes, and even in Canada, we talked about Pierre Poilievre busting Bank of Canada for giving the government of Canada more than they're allowed to give.
Right.
So there's no discipline, but there is discipline in physical gold. So this idea of the $1 trillion coin is absolutely malarkey. It's craziness. And it is an admission that they are out of solutions, completely out of solutions. And the idea of, well, we'll just print a coin and call it $1 trillion. That should do, shouldn't it? Well, on what planet? Planet illusion, it would work.
Right. Exactly. It was a big clown show, and even having this debate year over year about a debt ceiling that continuously gets breached for decades. I think they just need to have this debate to look like they're doing something responsible, to have a debate about these things, when in fact the debate always loses. There's no point to the debate because it's already settled. We're going to blast through this target, this ceiling, when in fact it was Mike Maloney who said this week, who gave a great explanation about the coin. It's not really a ceiling, Jeremy. It's a bottomless pit. And you just keep going through and you go deeper into the core of the earth, and you just, where we end up, we're into this abyss. So it's a big drama show, a big clown show, and a huge gimmick with what Yellen said. And she spoke, again, out of both sides of her mouth, and one side saying, we don't need a debt ceiling, just get rid of it.
Yep.
But let's make a solution called $1 trillion. Or
no,
actually, she was against it.
She was against it. This is the part. This is the crux of it. This is the crux of it. This is your takeaway. Okay. This is who's running the Treasury right now. She said that we believe when Congress legislates expenditures and puts in place tax policy that determines taxes, those are the crucial decisions Congress is making, Yellen said. And if to finance those spending and tax decisions, it is necessary to issue additional debt, I believe it is very destructive to put the president and myself as Treasury Secretary in a situation where we might be unable to pay bills that result from those past decisions. In other words, just give us carte blanche to produce as much money, fake money, backed by nothing, as we want. Just give it to us. Just give us carte blanche. And then she has the gall when it comes out to talking about minting $1 trillion coin. She trashed the idea of minting $1 trillion coin to defuse the debt ceiling crisis as the U.S. veered towards what would be devastating default on its debt payments. She said, quote, I am opposed to it. I don't believe we should consider it seriously. She told CNBC. It's really a gimmick, and what's necessary is for Congress to show the world can count on America paying its debts. Why? By raising the debt limit and just printing it from the Fed instead of minting it through the Treasury? Right. I mean, what difference does it make? What happened? The minting idea was not her narrative, so she didn't like that lie. She liked her lie. Only her lie matters. Craziness. Let's talk about the Fed. She was the chairwoman at the Federal Reserve. Let's talk about the Fed. The balance sheet on the Federal Reserve balance sheet is $8.4 trillion. $8.4 trillion. I did some digging, Jerry. Do you know that was the debt in the United States back in 2006 under Bush?
Wow.
Just think about that. In 2006, the entire debt of the US of the US was 8.4. Okay? Now it's the balance sheet of the Fed. The balance sheet back in 2006 under Bush Jr. was $850 billion. So less than $1 trillion. Now listen to this. Check this out. You know how we always talk about our ratios. The debt was 9 times more the Fed balance sheet back in 2006, 9 times more. Now the US debt is only 3 times more. That's how fast the Fed is generating debt. Right? And who's getting it? Who's getting it? We're getting it in the form of inflation because all the prices are going up across the board, and businesses have to tighten their everything that they're doing and pass it on to the customer, and that's what's happening. So thank you, Fed, for saving us, but don't save us. We don't need the saving. So yeah, the debt ceiling, they're always going to raise it. The coin, Yellen poo-poos it. That's crazy. The U.S. is broke. That's the real takeaway. The U.S. is absolutely broke. And if we follow the World Economic Forum and Klaus Schwab's, what's his answer to it? Well, let's just turn you from a debt slave into a slave. Let's just make you give up all of your goods, all of your assets, and you'll just be a slave. Forget the debt slave. Why? What's a debt slave? Well, it means that the Fed prints the money. we have to end up paying taxes. And Canada borrows money from the Fed too.
Lots.
They got an international window, but you owe the money back to the Fed in interest. You got to pay that interest somehow. Well, that's why you pay income tax.
Yeah.
And that's why they start raising taxes all over the place. So there's no doubt the world is a debt slave to these central banks. Mm-hmm. So we have to become our own central bank, if I can borrow a word from Gregory Mannarino, become your own central bank. And Jerry, what are the central banks doing? Besides the Fed. The Fed is a different central bank all on its own, but there's other central banks out there. Mm-hmm. And what are they doing?
Well, in a time where we're seeing institutions acquiring things on their balance sheets like cryptos, we're seeing central banks standing pat on gold and physical gold, nothing digital. There is just gold being added to the central bank balance sheet. This week it was reported that Poland's central bank is slated to buy 100 tons of gold coming up in 2022. And it was the governor mentioning that they were going to be doing this. They're going to be increasing gold reserves by this amount to strengthen the country's financial stability. This is what gold offers. And who else are we seeing buying and going big on bullion? Gold buying by central banks surged in the first half of the year, led by Thailand, 90 tons, Hungary, 62 tons, Brazil, 53 tons, India, 29, Uzbekistan, 25, Turkey, 13, Cambodia, 5, Poland, 3, and Mongolia, just under 2. Central banks are going big on bullion, and we're going physical. This is all it is. It's physical. It's nothing digital because you cannot print it. And we need it for financial stability. So yes, the message from Greg is become your own central bank. Diversify away from paper. Diversify away from fiat and false promises. We were promised that 2008 crisis will never happen again. The QE was a solution. We're on to number 4. There is no trust, but gold is trust when there is no trust, Jeremy. And this is the message, and we have to take this message from these central bankers. They're not here to lose. They're here to win. And when we have institutions like even this Federal Reserve and the Treasury Secretary bringing this gimmick of a platinum coin, the message was platinum. And the fact that they brought it up, that hey, we need a precious metal here. The only way that can work is if you have that amount of physical platinum or you revalue. And this is where gold comes into play. And the idea of gold revaluation has been talked about for a little bit over a decade now. And it's still on the forefront of many analysts. We look at analysts like Jim Sinclair, 50,000 gold. Why? It's because these central bankers will need to revalue the gold price up to squash all this debt, to get rid of this debt, to stop worrying about this debt. And this is how you bring financial stability back. And kudos to the Polish central bank for doing this. I wish Canada would do the same. Yeah,
and speaking of central banks and getting back to common sense, they're saying there's been some ideas floated out with Evergrande, right? Remember, they owe $300 billion in debt, and it could be the tip of the iceberg, and we don't know when it's going to hit, right? We don't know what type of contagion it could have, but they've floated the idea out there that, maybe China will have to utilize gold and revalue gold, and they could be the spearhead to revalue gold. I think what we need to do right now, Jerry, is talk about why gold is down, why gold isn't revaluing as we speak, what is the disconnect there, and what is it going to look like when it actually happens. So let's get into that. In the meantime, if you'd like to acquire some physical gold, remember, if you can't hold it, you don't own it. Everything at Guildhall is physical. The number 18778-SILVER, the website guildhallwealth.com. You can go to guildhallpreciousmetals.com and acquire for the first time or add to your stack. And remember, if you acquire anything through our e-store at guildhallpreciousmetals.com, you'll be entered to win 5 ounces of silver, which we'll draw at the end of the month. We're doing that because the last draw was so successful. We want to do it again and keep giving out some free metals. We've seen a lot of people getting into the physical gold market, mostly because they're seeing a lot of assets everywhere overvalued. They're seeing a lot of craziness in the market, and they want to get out of harm's way. Also, a lot of people are feeling uncomfortable if they've sold property and they've got a lot of cash And do they want to have all of the cash in one place? And gold is typically a great preserver of wealth. How do you know that? I'll give you a quick example, since you're asking.
Yes.
Over the last 20 years in Canadian dollars, gold has had 3 down years. 2 back to back, I think year 2000, year 2001, both under 2%. Then you had 2013, where in Canadian dollars, it went down 23%. That was after a decade of double-digit gains back to back to back to back. It's averaged over 11%. It has beat inflation. It will continue to beat inflation. And this is why it is a great hedge against inflation and a preserver of wealth. But most people, a lot of people, will look at the market and say, well, why isn't it rising? Ironically, when the price comes down these days, more and more people are buying than ever before. Mm-hmm. It's amazing to see how savvy the gold and silver community are when the price pulls back. And what happens is as a result of pullbacks, there's no product. Wholesalers start raising their premiums because they don't have the product. So they raise their premiums, and you reach this limit where all of a sudden premiums are getting jacked up because there's not enough product out there, and you have to wonder, why are prices going down? When prices are down, shouldn't there be a flood of inventory? The question to you, Jerry Correia, is why aren't the prices taking off? And what will it look like when they do?
Well, right now we are in the midst of a lot of central bank, particularly the Federal Reserve, talking about tapering. For those people who don't know, when you taper or you tighten, you start to strengthen the U.S. dollar. Gold and silver are negatively correlated to that, to the U.S. dollar index. So you have a short-term pullback. Right now, what we're seeing is tremendous demand. And right now, we're not seeing silver get caught up in the global supply chain squeeze. We're seeing supply chains around the world getting impacted negatively, including silver and gold. We're seeing shortages for gold and silver, but it just doesn't make sense. Why aren't the silver prices reflecting this? Well, we look at some charts and we see here that the demand for silver is literally at almost an all-time high, but the prices are down. So we have to look at things like the commitment of trader reports. So, and what we're seeing right now, the commercial short positions, particularly in silver, are at a low right now. So we have never been this low for quite a long time. And every time we see a bottom in these short positions, meaning these commercials or the bullion banks, so not going short.
Yeah, sorry. So the short position meaning that they're betting the price will go down.
Right.
So if there's a lack of short positions in the market, it's saying no one thinks the price is going down, mm-hmm. right? Otherwise, you'd have tons of bets that the price would be going down, and you'd see the short position massive. But you don't have that. You have it very small, which also means low risk entry point.
Right. So every time we see a bottom in the commercial short positions, like we're seeing right now, the price in silver rallies right after. And these commercials are the big bullion banks. And right now they are so historically not short right now. This cannot be ignored. So
Not short?
Not short.
Not short,
so
right.
They're actually physically going long now. This is either due to a supply chain shortage or just smart money.
Could it also be the Basel III rules?
That could be as well. We have an analyst, Ed Steer. He analyzes the COT reports, and he puts plainly, we're at the bottom of the barrel to the downside from caught futures market perspective, paper, and the remaining longs in the managed money, other reportables, and etc. To put into simpler terms, it's impossible to put into words just how outrageously bullish the setup is for a price explosion in silver based on its current configuration in the COMEX futures market. So we're seeing a massive coiling in the silver market. The shorts are being eroded. The demand is going through the roof. And where is the supply? Where is the supply coming out? So we have all of the fundamentals, even the technicals for silver in play. We're going to see a massive price explosion, Jeremy.
And when the price explodes, you're going to see a massive transfer of wealth, because at that point, like an insurance policy, you either own it or you don't. You either have the insurance policy or don't. You can't buy insurance policy when the house is on fire. So you have to be prepared ahead of time. And this is why it's important to have as much as 15%. Some people like David Morgan calls for 20% as an allocation of physical precious metals in a portfolio. Now that doesn't come from us. That's not out of thin air. That comes from the Abitz and Associate report that they put out, I think in 2011, I want to say, or 2009, something like that. But any advisor, with their fiduciary responsibility is going to say, listen, you have to have negatively correlated assets, and that's what physical gold, physical silver are. So I believe personally, from my studied opinion, that the price will explode as well, that it's going to be hard to get. The price is going to be rising and there won't be any availability. So I think many people could be locked out of the market, and there will be a wealth transfer. There'll be people who realize, wait a minute, I got to get out of these positions and I need to get into something that's going to protect my wealth. Can I do it? And this is why it's important to prepare now rather than wait to see the price of silver hit $50. There'll be plenty of people who want to buy at $50.
Try to get it.
And it'll be cheap at $50 too. How cheap? Well, we'll tell you in the next segment. The number 18778-SILVER, the website guildhallwealth.com. Welcome back to the Real Money Show, 18778-SILVER, and the website guildhallwealth.com. Remember, if you can't hold it, you don't own it. And everything at Guildhall is physical. It's got to be physical in precious metals accounts with registered accounts. You own the product directly. You get an inventory report showing exactly what's being held in the vault with those serial numbers for you. You can go to the vault, personally audit your holdings. I like to say that there are two firewalls and a parachute. The first firewall is that it's not with a bank. It's with a trading company. It's with a brokerage. Number two, obviously it's fully insured. You're fully insuring not only the portfolio through the Canadian Insurance Protection Fund, but the product is also physically insured. The second safeguard or firewall is that it's held in a vault outside the banking system.
Key.
And the parachute is the fact that, hey, if you're willing to pay the withholding tax on the registered or, TFSA, there's no withholding tax, you have the option to take physical delivery of that product. So there you go. I can't think of anything more safe in a registered account. Yourself?
Exactly. There is nothing safer. We're all kind of sort of funneled into the registered plans at one point in life. At the end of the day, some people like it, some people don't. Having your money locked away until you're 70, they start trickling your money back when you're 71 in a RIF. But obviously having precious metals in your possession is a nice thing. We would ultimately want to have it that way. But if your nest egg is in a registered plan, taking a 35% haircut on that is a huge hit. But to know that you can eventually take that metal out is a huge option to have, a huge advantage and opportunity to have, because let's say you do take the 35% haircut on the portfolio of your metals. You still have a good sizable 70% portion in silver. Silver to move up 30%. We saw that last year. You just made that back. So this is a really good option to get yourself some physical silver, physical gold within these registered plans. Just knowing you have that firewall and that parachute is great.
Yeah, and look, we believe in the transfer of wealth. We believe it's coming. We did an episode, I want to say a couple months ago, maybe a month and a half ago, about silver potentially getting to $600. Well, interestingly enough, I was listening to an interview with Cliff High, and he's predicted a lot of things over the last few years, and he talked about potentially silver getting to $600. And let's just ratios aside, let's just talk about one aspect of that, which I discovered from the silver guru, David Morgan himself. He was talking about this on a show recently, where he did a study on silver and solar power and wind power, and he discovered that to provide energy to just the houses in the United States for a year would take up more than all of the silver that's coming out of the ground, more than a billion ounces of silver. Now that's not including commercial.
That's just residential.
That's just residential, just for the United States. So when you start to think about renewables, you have to start thinking practically and saying, and they talk about solar power, and these solar power panels can only last like 30 years before they have to be replaced, and technology is always growing, but you don't get your money back on these things for after 12 years. So you get it's like after 12, 15 years, you're finally getting free energy out of it, but it's only going to last for 15 years. So split the difference, prorate it, and you kind of say, well, I don't know if this is really working. That got me thinking about these electric vehicles too, because there's only like 100 million of these. They want to ramp that up. How much silver are you going to use in those? It's as you know, they're massive computers and batteries. And what happens if there's a blackout? Like, how are you going to charge your car? I mean, someone tell me. I don't know the answer. I'm just putting it out there. I don't know. And I see rolling blackouts all over the world. And that's kind of an issue with the cryptocurrencies as well. Facebook went down for 6 hours, right? So, how can, other things can go down. So this is the problem with the dependence on electricity itself, because you need a guaranteed source. And if you have gasoline, you can put that in a car and drive anywhere. Right. So I'm just saying these are some issues to consider. Is renewables reliable? Is the question. And then if you really dig into the math and what it takes to get these things up and running, you say, wait a minute, there's not enough silver. There's just, it doesn't matter what the price is. Yeah. There's not enough silver. But if we go even an inch in that direction, the price is going to go ballistic, because this is beyond the monetary side of it. This is just from an industrial standpoint.
That's right.
What do you think, Jerry? What do you think silver could go well beyond $200?
Absolutely, Jeremy. The ratios speak for itself. And just knowing that the average American investor, they have a gold and silver portfolio allocation of around 0.2%, which may as well be zero. So if we go back to that, if it's an associate's allocation of 5 to 20%, what will happen to the gold price? What will happen to the pressure? And they allude to physical. They don't allude to gold or silver proxy being an ETF, which is more digital, or certificate, which is just fiat gold derivative. We're talking about the physical here. So if there is just a mental shift towards gold and silver, this will tilt the market into the hundreds, if not thousands in silver, tens of thousands for gold. And, history is going to repeat itself, unfortunately, especially when we come down to the mismanagement of balance sheets, the mismanagement of fiat, printable currencies. They all fail. These systems fail, but one thing that doesn't fail is your gold and silver. Yeah, you know what, Jerry? I obviously completely agree. And just thinking about our conversation today and looking back at 2008, when people did look at gold and silver more speculatively back then, some people started to say, wait a minute, desperate times call for desperate measures. And if they're going to do this to the price of gold, then I probably need to own a lot more. And like I said, everyone is hip to that now. Price drops, everyone says, desperate times call for desperate measures on the part of these bullion banks. They're probably trying to get out of their short positions. I'm buying. And the trend over the last several years has been towards physical gold, physical silver. And that's what we're seeing. And the trend is your friend. It's going to continue. And the prices are going to surprise everybody. So if you want to get some physical precious metal in your portfolio, please feel free to contact us at 1-877-8-SILVER, the website guildhallwealth.com. At Guildhall, you can acquire the product directly, take delivery, come pick it up, schedule a pickup, or we can ship it to you, give you the tracking number. It's fully insured. We also offer the depository service. This is great for if you're leaving the country. And unfortunately, we don't want to see people leave the country. Great people. It's sad to see a brain drain, but it's happening. That's the world we're living in, and people want to store their physical. And it's a great way to make sure that it's fully insured, secure, and of course liquid, being able to pick up the phone and buy and sell very easily. And then of course there's registered accounts. It's something that we really strongly focus on. It's money that you should be protecting for the long term. We'd love to talk to you about our strategy on that and what people do in that market. So again, the number 1-877-8-SILVER, the website guildhallwealth.com. Jerry, quick, last 30 seconds. And just remember that Guildhall just brought the opportunity back to sell your crypto and purchase gold and silver or a natural fancy color diamond with your crypto profits. Remember, these are cryptocurrencies that are not being adopted by central banks, and all it takes is a central bank to start to bring in their own cryptocurrency, and they don't like competition. So it's a good idea to think about taking some profits in your Bitcoin, your Litecoin, Ethereum. Still very bullish, I think, for the most part, but you have to have an exit strategy, and gold and silver is that strategy.
Thank you again for everyone joining us on this long weekend. We wish you a happy Thanksgiving. Remember, when it comes to the precious metals, the best is yet to come, and we look forward to speaking with you next week here on The Real Money Show on Global News Radio, 640 Toronto.